Right, welcome to the solution to problem 4-6B. This is going to be a solution for requirement number 1 only. So we've got a list of account balances in alphabetical order here, and all adjustments have been journalized and posted, but the closing entries have not yet been made. So what we can infer from that is that we need to either do closing entries or essentially use the information presented to calculate a statement of owner's equity in order to get the ending capital balance, so that we can then prepare the company's classified balance sheet in report format at March 31st, 2010, and so on. Okay. So in order to do that, let's go through and pull out the income statement accounts so that we can calculate the net income for the period, so that we can then go on and calculate ending capital. So just kind of running down the list here. There appears to be only one revenue account, and that's service revenue, with a balance of $56,880. And expenses now, advertising expense of $720, and amortization of $1520. And I'm crossing these off the list of account balances in the textbook as I'm kind of doing this, so that I don't, double count or miss something down the road. Insurance, $480. Salary expense, $14,240. And supplies expense, $36.80. And just a quick double check, I don't see any other expenses there, so let's total these guys up. They work out to $20,640, which means that we have a net income of $36,240. Okay, so then we can calculate capital as follows. So we have A Wang capital dash beginning as being 40,560. Add net income 36,240. That's just from here. Less, and we would also add any owner's investment, but there are none. So less A Wang withdrawals, 24,960, to give us A Wang, comma, capital dash ending, or at March 31st, whatever, 51,840. Okay, so we're going to need that number for our balance sheet. So you know what, let's start a fresh page here. No, it's not A, it's just Wang Financial Services. Balance sheet as at March 31st, 2010. Assets. Current assets. Cash. And going down the list here, cash shows up as $17,720. And next will be accounts receivable. Remember, we can't abbreviate on financial statements. 9,200. And then here the order becomes less clear, right? We know it's current assets, so we have prepaid insurance, prepaid rent and supplies. I'm just going to go in the order they show up on the balance sheet as all being current assets. So next one, interest receivable. That was $720. Prepaid insurance. $480. That's a 7. Prepaid rent. That was $37.60. And supplies. $3,040. Now, quick double check, but I think that's all for the current assets. We have this one account called Other Assets, but they don't specify whether it's current or long term, so I'm going to assume it's long term and incorporate it in that section. So from here, I'm going to go total current assets, and that adds up to $34,920. Now, long-term assets. And I think the problem asked us to use these headings, right? Use captions for total assets, total liabilities, and equity. All right, anyway, long-term assets. Now, I'm not using property, plant, and equipment because we have other assets like notes receivable that don't fall under the heading of property, plant, and equipment. So I'm just going to use long-term assets as a nice umbrella term for this section. Now, again, we do want to do this kind of in order of liquidity, and I figure furniture is going to last less long than the building, so I'm going to put furniture first. But at the end of the day, I mean, we're not going to fuss really about the order in this part of it. 34,560 less accumulated amortization, 6,160. So that gives us a net furniture, net book value of 28,400. Now we have equipment. No, we don't. We have building. $44,720 less accumulated amortization of, this building is almost fully amortized, 37,840, which gives us a net book value of 6,880. And therefore, next we will have land, 23,000. We also have a note receivable that we were told was long-term, 5,520. Other assets, 16,840. And as I mentioned, we're going to default assume that this is a long-term asset. It doesn't specify one way or the other, so we'll just go with that. Total assets, 115,560. Okay. Liabilities. Current liabilities. First one is, if it's there, which it is in this case, is always accounts payable. Sometimes you'll see it called trade payables, but in our case, accounts payable. $21,760. And next, all the other things payable that are short term. So interest payable, 5,240. Unearned service revenue, $1,360, and then missed salary payable. Get that dropped in there as well. 11,920. And then they've got this one other account, other current liabilities. Don't know what the heck that is, but other, we'll just stick it at the end. Other current liabilities, 880. And a quick double check, but I've been crossing all these off, and I think we have captured all the current liabilities. So, total current liabilities, do the math, 41,160. And now we have one long-term liability, and that's this note payable. But because we've only got one, we're not going to set up a section with long-term liabilities. I'm just going to add note payable, comma, long term, 22,560. So if we'd had more than one long term, we would have had set up a section with a header of long term liabilities and blah blah blah. But we've only got the one, so now we can just go total liabilities. And that works out to 63,720. And so now we do have to have a heading for owner's equity, even though there's only one of those, just because it's a the third section of the balance sheet always will show up in that kind of a form. And so we have a Wang capital, and how much did we calculate that the capital was? Ending capital 51,840. And so now we can write total liabilities and owners equity, and we do the math, and we end up with $115,560. And does that balance? There it is. Yep. 115,560. Woohoo! All right. So this concludes problem 4-6B, requirement 1. Requirement 2 would have you calculate current ratio and debt ratio. I think we've done enough of that. We don't need more practice.